Afternoon. Today is Monday, and it's February the 19th. The time right now is 10 minutes to 3 in the afternoon. And today we're going to have a quiet day because the US is celebrating a holiday. Today is the US President's Day, so the US market will not be open tonight. So it's basically going to be a pretty quiet day. I hope so. And let's start off with what happened over the weekend. We have seen that Friday we saw the release of the PPI numbers. Now, if you remember last week, we have three important economic data that we released from the States. We have the CPI numbers, which came in hotter than expected. So the market reacted to the downside. You can see in the S&P 500, the market was trading at a height of 5,048.78. It was already weakening, but when the number came out in the CPI, the S&P 500 basically sell off very, very sharply to a low of 4,919.51. And the following days, we have the release of the retail sales, which came in weaker than expected, which basically cancel out the impact of the sell-off in equity markets because retail sales is a lot weaker. So there is that talk about maybe the Fed should start to cut interest rate right now, regardless of what happened to inflation. So that was the sentiment that caused the equity market to rebound. But the rebounds here failed to take out the all-time high of 5,048.78 with a high of 5,043.33. And this is, of course, on the back of the release of the PPI numbers. And the PPI numbers also came in hotter than expected, very much in the same fashion as the CPI numbers. However, the reaction couldn't be more different. The PPI numbers did not cause a sell-off in equity markets. Only towards the end of the closing of New York trading, the DVC equity market comes off. So this coming off towards the closing of Friday actually set the stage for further losses going into this week. Tonight will be no trading, so we won't get any updates in this particular department here. So by and large, technically speaking, if we don't see a surge beyond 5,048.78, then the market is likely to come down to finish this three-wave pullback to challenge the 4,919.5. So I think there's a very good chances level here between anyway between 4,883 to 4,914, which could be a good area to actually pick up some long position. Now there is a very minor area of demand here between 4,903 to 4,920. So again, look for levels to buy if you still believe that this bull market is by no means over. And of course, this obviously is going to be the case because there is no sign so far that this market has already peaked. Yes, it may have a temporary high at 5,048.78, but any kind of pullback is for now going to be seen as part of a corrective pattern, which will leave the bull market here very much intact. So do look out for that as well, unless we have a major sell-off which extends a lot lower than what we are expecting here, especially towards 4,834. Then that will be the first sign that the market may have already peaked. So until then, the market can hold out at just under 5,000. There's going to be scope that the market may actually eventually bounce back up and take out a 5,048.78 high that we see so far. Now in the Nasdaq 100, we can see that the pattern is almost quite similar. We can see that the market pick up at 18,042.45 before selling off at 17,476.45 on the back of the CPI numbers, and then rebounded back on the retail sales number, and then finally closing the week on a slightly weaker note, with the high here not being able to take out the most recent high at 18,042.45, setting the stage for a three-wave pullback at a bare minimum, targeting somewhere between the 17,400 to just under the maybe even perhaps to 17,300. So anywhere between this 100-point range is going to be where I think the market will stabilize. And if it does, then it will probably bounce back up again to take out the 18,042.45. Okay. And as we are talking about equity index, take a look at the Dow itself. Now the Dow actually did not sell off as much. You can see there was a sharp sell-off, followed by equally sharp rebound. The high traded so far is at 38,929.32. The drop is 38,037.57 before we rebound back on Friday to 38,827.77 before it closes a little bit weak. So by and large, the support line here should be able to hold, but if the market do break below the support line, look for a structure. If this structure is a three-wave pullback, no lower than, let's say, 37,700, the market is still poised to go higher, okay? So do walk out for that as well. And in Asia, we can see that the Nikkei continues to be holding its value pretty well. We can see that the high traded at 38,870.5 still holds, and we do see a bit of a pullback, but this pullback is still very tentative. If we see further losses, it's as part of a technical pullback, possibly gunning for 37,400 to 37,600 thereabout. And in the Hong Kong market itself, the Hang Seng market, we can see that the Hong Kong market is back in full swing. So is China after a week of celebration for the Lunar New Year. Prices in the Hang Seng is currently holding pretty well at above 16,200, currently at 16,221 as we are speaking. So the high here at 16,410 seems to be holding out the market, but I think the market here that the rebound from 14,000, let me see, 14,776 is probably not over yet. There's still scope for a little bit more to perhaps 15,536 to 15,745. What happened thereafter? It could be another sell-off for all we know. Okay, but so far the rebound in the Hang Seng is very corrective in nature. Now, when we look at the dollar index, of course, I'm referencing the dollar index futures traded in the Intercontinental Exchange. Of course, this is a CFD, but we can see that the dollar index has basically picked out at 104.85 and it's currently pulling back. Looks like it's going to be a three-way pullback. And if that's the case, I think the market will challenge anywhere between 103.75 to 103.80 levels. And this is also where the 100% equality move at 107.78 is going to be like. So I think there's a very good chance these two areas should hold, and look for the area, look for prices to drift lower to basically reposition long. Okay, for the time being, dollar does look like it may correct a little bit, but by and large, I do expect it to rebound again. Okay, and over in the euro dollars, you can see euro dollar is currently trading the upper end of the last week's trading range. You can see the currently price is just trading below 108, and I think the top side is quite limited unless the market blows up and close above 108 convincingly. I think the market is currently at this point in time very vulnerable to another sell-off, and the next sell-off, if I'm correct, should theoretically be able to trade below 106.94 low that we've seen so far. Target is still at 106 round number. And over in sterling, now sterling have a different structure here. Sterling does look a little bit firmer, but by and large, I would see that the sterling itself is basically a consolidation within a very broad range. The low end is 125, the upper end is 127. So we can see between these 300 odd points pips range, the market is just going to be trading within this area here. So by and large, right now, we can see that the sterling currently is trying to go higher at 126.23 high so far. And we knew last week that the UK economy has slipped into recession. So there is no surprise here. But the thing here is that why is the sterling still so strong? Because there's still no talk of a rate cuts yet. So I think that is holding up the market for the sterling itself. So if this ends up, there's a good chance you may retry the 127.86 high that we saw last week. So three wave, possibly targeting 127. And then when we look at the other currency, let's say we take a look at the Aussie. See, the Aussie is poised to come down. Okay, Aussie has been having problem trading above the 0.6550 levels. This morning, we have a breach of that level to a high of 0.65, let me see, 0.6551. Okay, but it's not convincing because on a close-to-close basis, we need market to be convincingly above this level. Even if it does, I think this is part of a technical rally here. Market is unlikely to be able to trade beyond 0.6624 high here. So by and large, I'm still looking for levels confirmation for the market to actually lose its momentum and to come down. I am still hopeful that the market will be able to take out the 0.6442 low that we've seen last week. And over in dollar yen is currently at the crucial point itself. You can see that the market has popped back above 150, high of 150.87 high was traded last week itself. And right now we have a little bit of a pullback. Now this pullback is very, very shallow, likely to take the form of a three wave, targeting somewhere just around the 149 levels. Okay, so do watch out for possibility of testing this swing low here, or perhaps even this swing low here. Anywhere between the 149 level should be able to hold out, and be careful chasing this market ever higher, because remember 152 has been a very sensitive area, both in 2022 when the BOJ actually intervened by selling dollar for yen, and again last year when the market actually came very, very close to 152 to 151.91 before it comes under heavy profit taking, which saw dollar yen traded to as low as 140.24, and now it's bouncing back again. So again, the driver behind the dollar yen rate is of course the interest rate differential between the BOJ and the Federal Reserve. Okay, And here we take a look at the precious metals market. We can see gold has actually edged higher, but this bounce here is actually quite corrective in nature. Although prices has gone up a little bit to $2,021.55 thereabout, I am of the opinion that the decline from the all-time high here at $2,144 is not over yet. I think there's scope for the market to go all the way down to test the lower end of $1,900. So this is possibly part of a technical rebound. And if the market cannot sustain beyond $2,032, I think it's likely to come down rather than go up. However, silver does look a bit different now. Silver has always been underperforming. Last week, we see something of a roll change here. We can see silver bottom out at $21.87 before it bounced up to $23.49. And that is actually in contrast to what we see in the gold market, which basically has not gone up that much. So on a percentage basis, actually silver outperformed gold on Friday, but we can see that this is unsustainable because my outlook for gold remains a little bit bearish. So unless gold has turned bullish, it is very difficult for the silver market to actually take the lead. So we have to watch this development here. Top side is about $23.60 to $23.72, okay? And that being the case, let's take a look at crude oil. Now, crude oil has done well. This last week, you can see crude oil actually was holding about $75 before it pushed even higher to $78.80 thereabout, or rather 75 cents before it hit resistance. So top side seems to be likely to be kept. We can see that the most recent higher is just under $80. So even if the market goes into this bracket of prices, I suspect it's going to come under selling pressure between $79.18 to $79.46. So top side could be limited by these two areas here, and likely to see perhaps another downtick. And this time, if the market comes back down, I think $75.52 to $75.76 seems to be a good area of support. And let's take a look at Bitcoin. Now, Bitcoin has done very, very well. You can see Bitcoin has actually punched above 52,000, and but it has not been able to sustain. So immediate term, I think there's going to be some kind of correction going on here. Now, if I blow up this chart, you can see that there is a pin bar here. And this pin bar suggests that either the market will go into a sideways consolidation with bias to the downside. I think the downside scenario has to be entertained. If we do have a very shallow one, perhaps it will hold above 50,000. But if we have a deeper corrective pullback, then the next area to look out will be area between 47,700 to 48,400. So we want to watch out for further move in this space here. This is all I have for you. Now remember, tonight is going to be public holiday in the States. No market will be open in the States. So perhaps you can also take a break. I'm going to take a break, but currently I'm in Johor Bahru with my family, taking my grandson to Legoland. So I shall see you tomorrow. Bye-bye.